Here we go. Damn it! I pinched it. I pinched the inside of my hand.
What is going on, YouTube? It is I, Brendan from Market Makers. Thanks everybody for tuning in. What a video, last video, the esoteric crash cycle. Over 9,000 people watched that video. Guys, I shared with you in that video the fractal break pattern, the trend of the market, a Puet's crash window that we are approaching with the lunar eclipse this weekend. If you guys want to see it, it's a long one. Get your popping corn ready. It's 51 minutes. Watch the last video, over 200 comments, and something that separates me from the rest of YouTube, I actually answer all the comments because I want to help people learn to trade. You guys like that intro, by the way? I thought it was pretty dope. But I want to help people learn to trade and share my view on the markets. Guys, but ultimately, if you want to be with a group of people that love to trade, check out our Discord with over 12,000 people on our Discord, professional staff, professional traders. It is a fun place to be. You can trade our signals, their signals, talk amongst each other. I'm hanging out there 6 days a week at a minimum. So you can get me and ask me questions directly as well. If you want to join our room, it is free for your first month. If you want to try out BingX to trade all the cryptos, and that is without a VPN, boys and girls, you can trade all the cryptos with our link. And with our link for Simple FX, you can trade all the equities, commodities, Forex, Bitcoin, handful of cryptos all around the world, guys. Check out either of those links. With our link on Simple FX, exclusively, you get up to a $5,000 first-time deposit bonus. All those details are in the video description. I'll pin it in the YouTube comments. Give us a follow on X because I am active there. This video will also be posted on X as well. Last video, I broke down this Bitcoin trade. And if you took it, because how apropos was the timing on that video, right? So when I was recording it, as you guys know that watched that video, Bitcoin was at 30,000. What is this? 30,850 or something as I was recording it. Shared with you my esoteric wave pattern, my targets, how to exactly trade this with the fractal break, the Bitcoin up move. And guys, you got a nice 11% off that trade. Obviously, if you took my S&P short at 43.82, shared prior last week, then you are well into the money. I think the S&P at the time right now, as I'm recording, is around 4150. So that's awesome. More than 200 bars on that S&P trade as well. So this is what we're doing, guys. Sharing trades, have a room for this. It's a fantastic community. I highly suggest you guys check it out. Let's look at this. So we're going to come back to Bitcoin because I want to show you what's going to affect the overall market. Bitcoin will be coming up first, okay? So just wait 1 second. I don't want to repeat all the esoteric cycles and go into all of that again because that last video was long, so watch that last video to get caught up. Something to pay attention to, the yields, the 10-year in particular. We hit my 1618 target of 5%. 5%, and now we're declining some. Is this the top? I am not a bond expert, nor do I play one on YouTube. I don't care about the debt market. The only time I ever watch it is when we are in bubble cycles, because there's a cycle that the debt market as well goes through in confluence with the equity market, okay? If this was the top, and there's others that are predicting this can go a lot higher due to the $2 trillion deficit we are running and all the paper flooding the marketplace, but if this was the top, there's a very important cycle to pay attention to. I'm going to let you guys listen to it. It's a 1-minute clip from this money manager, and we'll talk about it on the other side. Lee, run the clip.
And is that basically what you expect overall here? But, at some point, 2024, is it recession, or is it just you just don't see a lot of market upside from here?
No, I mean, I don't want to get over my skis, but all signs seem to me to be pointing towards a recession. Folks want long rates to peak, including me. But the problem is when long rates peak, it's great for bond investors. It's not so great for stock investors.
Sure.
Bond rates don't peak for good reasons. They peak for kind of scary reasons. The economy is slowing, and stocks tend to follow yields downward. Back in 2000, the bond rates peaked in February, and then the stocks peaked 7 weeks later. In 2007, the same thing happened. So I expect both peaks to be coming in the relatively near future, and that scares me. And I'm not calling for Armageddon, but I am cautious.
Yeah.
So notice, guys, he talked about specifically .com and the GFC. He said when yields peaked, and if this is the peak, you need to pay attention to this, 7 weeks later, there's that number 7, 7-year cycle, the Schmidt cycle, 7 weeks later when yields peaked, the markets sold off, okay? If this is the peak, as yields drop, this is bearish for equities, which ultimately, my crypto bros, means it's bearish for crypto as well. So you need to pay attention to this, because if this starts dropping, flight to safety, people buying bonds. Remember, this moves inversely to bond price. And guys, guess what? On Simple, you can trade the 10-year. You can trade the German 10-year as well, the US 10-year. So definitely check that out, because that's going to be an awesome trade when that comes to fruition. Let's look at this on a chart perspective, focusing particularly here, July 2007, we got up to 5.19 on the 10-year. Look what happened after that as markets started to crater. Yields will move down, just like that gentleman was saying. Yields will move down with the markets. Yields bottomed on the 10-year, December 15th, 2008. Market bottomed spring equinox, 2009 of March, S&P 666. Lots of numerology in the marketplace. Those that know understand. So again, this is something you really want to pay attention to. Right now, again, we got up to just over 5%. You got up to 5.19. So could there be some more upside? Maybe. Maybe there's more upside in yields, but again, that's pressure on the markets. Let's look at the DXY really quickly. DXY starting to move up. What do we have coming up, guys? November 1st, we have Powell coming up. And with November 1st at the FOMC meeting, if Powell does not raise rates, which again, the market has priced in a 99% chance last time I checked that he will not raise rates, but due to the GDP coming out this morning at 4.9%, very, very hot, I expect a hawkish Powell. So will we get a whipsaw type bottom rally, then fall back down again? We're going to look at that potential in the charts, and we'll have another video out on Monday as well, obviously, to go over this, to see how this develops today, tomorrow, and in futures on Sunday, okay? DXY trying to push up my 1618 target at 107. We'll see if we can get that again, or if the DXY is topping out after this 12-week run. Now let's go back to Bitcoin. I'm going to analyze this. Remember in that last video, we talked about my ultimate wave 5 target, esoteric wave theory, 2618, 41K. Can we get there, or is this topping out? Are we building a topping structure in this range? Well, first, let's look at some fibs. I gave you my wave projection fibs. Again, you get to the 41K here, but what is this range, right? This is harmonic expansion and esoteric wave theory between 1618 and 2618. We showed you the fractal high and the diamond pattern. Down to that fractal low. We got above the 1272, currently using it as support. Price is 33,989. The support level is 33,846. That 1618 would be 36,416. Could you just see that? Kiss that, build a top here like a double top, and then fall apart? You could, but let's look at this a different way. And to do this, we got to zoom out back to my retirement trade. This is my retirement trade I shared on YouTube. This is Bitcoin up at 48.2. Let's see if we have fib confluence here for any levels. 48,210, 70+% drop to the market low of 15.4. Look at the 786. You're not going to be able to see it very clearly because it's overlapping, which is what you want to see as a trader. 786, as you guys know, my favorite fib to trade. 786 is just here at 480 or 41,000. You see that right here, overlapping my 2618. So I want to see this move. That's the move I want to see to get to 41, but can we get it? As you guys know, I've been saying if the S&P loses 4,200 with velocity, meaning it continually strongly trends down, I expect Bitcoin to pull down as well. And let's expand upon that to see if we can get to that 786, because if not, we got to look at some tighter fib levels here. Let's go ahead and expand upon that. We are on the daily. What's the MFI? You got overbought on the daily. So let's zoom in here so you guys can see this as well. Zoom in, expand this, and see what this looks like here. These are supply wicks. You see the supply coming here. We don't have a lot of candles, so we're going to go down to the 8-hour. Let's look at this on the 8-hour time frame. Got a few more candles. Now, what you want to see, if we were going to mini cough this structure, let me zoom in a little bit more. You guys can see this. If we're going to mini cough this structure, you want to have your buying climax, your fractal high. Okay, your buying climax, and Bitcoin's so volatile, your reactionary candle, the very next candle gave you that base. So you have Bitcoin trading between 35,321 and 32,841, just underneath that 618 from the 48.2 level. 35,697. Do you see that? So this is very key because I want to show you this. And obviously, if you go into a smaller time frame, the 4-hour, whatnot, these levels, I always keep my bigger fib pull downs as my key levels from the daily. Okay, even as I go into smaller time frames to look for entries. But there's some events happening here. You have your buying climax. You have your reaction candle. And right now, as of now anyways, you have a higher low. Again, this is a very young, very immature trend. You have your higher low, but what you would like to see is you want to see this type of W pattern form here, that where you come back up to the upside. Remember, this is the original Wyckoff method. You get on top of your ceiling here, 35,321, and you get this move, your Livermore pivot. Richard Wyckoff teaches how money moves through the market. Richard Wyckoff knew the market was rigged. He was close friends with Charles Dow, as in Dow theory, as in Wall Street Journal. Charles Dow and Richard Wyckoff had lunch once a week. Richard Wyckoff was friends with Jesse Livermore, the first billionaire trader. That's why he called this the Livermore pivot. This is Jesse Livermore's favorite move in the market, and a bullish uptrend market, because as you guys know, you also get this to the downside when you form this pivot. Break that fractal that will form there, and you get the downside Livermore pivot. Okay, Richard Wyckoff, friends of W.D. Gann as well, the most successful documented commodities trader of all time. So sometimes it's who you know, right? So this is a very young trend, guys. This trend could come back down and down thrust, but overall, what you want to see in bullish TA is you want to see a higher low structure. You want to see this come up, breach on top of here, and move up. And if it does not, and you just end up thrusting, if the markets can't make a bottom or hold a bottom, especially with Powell, watch to see if 618 at 35,697 holds some resistance, and watch what patterns may form here, especially on smaller time frames with more candles like the 4-hour. Watch what patterns may form, right? If price comes back up and does something like this and then comes down, what did you just do? Again, double top, guys. Most of the trades that I take in the marketplace aren't that complicated. They're based on my wave targets, and I'm looking for W patterns. W patterns to the upside, people would call this a double bottom as well, higher low structure, or I'm looking for M patterns, particularly when the second top is lower. This would just be a double top structure. And you know what this pattern is? When you have this, you come down, you have this, you come down, and you have this, and you come down. People call this a head and shoulders. It's a 5-wave pattern. That's all it is. This is just your move up, move down, move up, move down, move up. And you would try to trade this here, ideally, and potentially on a fractal low with a break, okay? So all the patterns I trade are basically 3-wave and 5-wave patterns, double tops, and what a lot of people would call head and shoulders, which I just call a 5-wave pattern. So this is what you're looking at here on Bitcoin. Will it hold this structure? If it starts to lose 32,841, you want to see if it comes down. And again, look for that reverse pivot, because you can trade that break. And I would do this with confluence of the marketplace. Let's just pull a fib here. Again, this is 4 hours, guys. This is a small time frame, okay? For me, I trade on the daily, but this is a 4-hour time frame. Looking at this, what would this mean? If Bitcoin comes up here, 786, 34,865, you want to make sure you can break that, okay? Because if you don't break that, you get some type of supply wick, you do this, and then you're just looking at your smaller trends here. Now, these will be small trend changes for Bitcoin. The key thing to remember, again, is Bitcoin. Let's zoom out in the daily so you can see this. Bitcoin was trading in a very tight range, okay, here in our diamond, going all the way back to March. Let's look at this. See these candles over here? Look at the date. March 17th is when you entered the diamond. Yes, you have a price range here of, 26K all the way up to 31,876 or whatever that fractal high was. So you have a big price range, but you were going sideways while the S&P was moving up. Let's look at the S&P to give you an idea what the S&P was doing back then. March 2023. We're going to come back to Bitcoin. March 2023. This is when the market crash should have accelerated. Remember what this was? SVB and New York SIG. They both failed. The Fed stepped in. They came in with $400 billion with a B to backstop the market. They implicitly guaranteed all U.S. deposits in banks. They allowed banks to take their underwater paper, give it to the Fed, and they would give them face value so they did not lose any money. Big liquidity came into the marketplace vis-a-vis the Fed, and the market rallied. So while the S&P did this rally, Bitcoin went sideways. That's why you saw this late surge with Bitcoin, even as the S&P is now trending down. Understand how these markets intertwine, okay? It's very important when you're looking at things and deciding whether or not you should be bullish or bearish on them. So when we look at this with Bitcoin, if the markets continue to descend, this is going to form into a topping pattern, which I'm going to look at on the 8-hour and daily as we get more candles. You can get down thrust below 32. You can get up thrust trying to test that 35,697. But I want to see, this is very immature. I want to see a pattern form here and what the markets will do, especially with Powell just around the corner. That esoteric crash cycle video, I shared with you the Puetz crash window that goes all the way into like November 2nd. You can have that Puetz crash window where we should see a secondary high in the market, which could be what Bitcoin's putting in now. And as the markets sell, you can see them rebound, try to move up. And guys, if that Puetz crash window plays out, again, watch that video. 2 to 4 weeks of hardcore selling is what would come next if it were to play out like the tulip bubble, like 1929, 1987, 1989 Japan. I showed you the GFC cycle, the Puetz crash window, 50% drop in the market. Interesting cycle to be used as confluence for trading, not to be solely traded upon. So that's where I'm at with Bitcoin, guys. Key levels for me, 35,321, get on top of it. Get on top of 35,697, just above it. Most likely you'll get above and come back and try to make a base. And then the key level to hold for support, 32,841, okay? And if that was to break, if the markets start breaking down more and Bitcoin does start pulling down, if that was to break, you want to hold this 1618 to 31,245 with this pivot top, okay? You want to hold that level. If Bitcoin was to come down, if the markets really start falling apart, you want to hold this level, try to reverse the trend back into your Wyckoff range, okay? Let's go ahead and move forward. Let's look at the DJI, the Dow, the mini S&P, starting to take out your first fractal low. The markets are very, very weak, 5-wave pattern tops. Let's look at this. So this was hovering right around the 1618, 33,010. If you get harmonic expansion here, the DJI is going to 32.3, okay? I don't think you're going to get there yet until we have the Powell event. The Powell event is going to potentially really push the markets down, or again, a dovish Powell, a mealy mouth Powell who wants to save the election cycle, doesn't want the markets to crash. He will announce they are pausing and they are very happy. He'll focus on all the positives. We're very happy. The yields, the bond market, the debt market's doing our job for us. And you can see the market take some solace in that and try to put in another rally. Let's look at this and see what that, so that next projection, 32.3 here on the Dow. For the upside, if we do get some type of basing structure, again, these fibs, we're going to get some lower level fibs here, 486, 382. Let's look at this here. 382 is 33,366. That's a ways off, guys. So I would start looking at these lower level structures for my fib pulls here on the daily time frame. And again, I don't like to do this while we're actively dumping because the numbers don't mean anything. So we don't know where the bottom is. But just to give you an idea, the 618 is 33.1, 46 is 33K. And this will change, obviously, going to the 8-hour, going to the 4-hour. Look at your structures that could potentially be forming here on the Dow. Guys, that death cross we talked about, November 2nd, it moved up. It got moved up by a day. Death crosses and bear markets. Death crosses and bear markets have catastrophic results. We went over that 2 videos ago. Most YouTubers, when they talk about death crosses, they take a big chunk of data. They look at death crosses. Oh, the death crosses over the last 10 years. Well, they can average anywhere between 30% and 3%. It really just depends. You never know. Incorrect. You have to look at it in the cycle. Death cross NASDAQ. NASDAQ fell 34% last year. Okay. Death cross S&P. S&P fell 25% last year. Look at the death crosses and the cycle you were in. This is a bear market rally approaching a death cross here on the Dow. Let's go ahead and look at this. Something I want to share with you as well. Remember, we used to go over this. This is the Elites trend line from 1987. Peter Elites, I like to give people credit that discover things. This is log scale, guys, monthly time frame. 1987 bottom. Look how it held as support here in 02, the dot-com crash. Look at that drawdown and look at the fibs. This is my esoteric wave theory. When you understand wave movements in the marketplace, again, this would be invalid in Prechter and Frost wave theory, their version of Elliott wave, because your wave 2 is below my wave 1. But look at the accuracy of the target, 48.29 at harmonic expansion 2618. It's a bubble. It's a bubble, boys and girls. So when you look at this, again, here's our pandemic low. Wave 3 took us all the way up. Pandemic, again, spring equinox for the pandemic, gave us our wave 4. Wave 5 was up. And if you understand this, again, this is why I short it on our Discord, guys, at 45.92. Part of the confluence factor hit the top of the trend line, spiked above it. And the pattern I want to show you here, zoomed out on the monthly, 3-wave pattern. You guys see this all the time. We just got to rename our company name the Double Tops. Look at that pattern. What does that look like to you? If I showed you this on a 15-minute, you'd say, oh yeah, it's a double top. When this double top breaks is when you're going to see massive market dissension. Look at the drawdown here on the monthly time frame here, okay? So when we look at our fibs and do our normal target projection for this leg, 34.91 on the S&P. You want to see this fractal low get taken out. You are just now at the 382 of 41.44. And again, this is a log scale, okay? Could we see this type of move? Get that next little rally to give us what? A lower high? You could, because you did it here, okay? You spiked up, sold off like we are now, came back up, and then came back down. These 3-wave structures happen all the time in larger 3-wave structures. 3s and 5s are very relevant in the marketplace. Ralph Nelson, Elliott knew this as well, okay? Gann traded off 3-wave patterns. Elliott traded off 5-wave patterns. Be aware of this, because when this breaks, look where the 1618 takes you, 29.41. And as you know, my prediction is 2,000 to 2,400 for the final resting place, taking you back down here for this harmonic expansion, 2,229. And where's that next drawdown coming, guys? I told you I'm looking at 3150 to 3250, 3300, right in that range, 3237, that next fib level down. And you can get this same fib basically just by pulling it from the pandemic low, retracing the bubble. Look at this. The 486 would be down here, and your 618 is right down here as well, okay? Again, this is log scale. I like to do my stuff on linear charts, but for the purpose of being able to zoom out and see this on a much larger time frame, look how this is playing out right now, okay? So this is what you're seeing here play out, and we could bounce off the 382. We could bounce off the 486. Where's that number? 4,000 roughly, 4,026, and come back up for a lower high. And that's my next big short. That will be my next big short, is the next big bounce that we have in the marketplace. Trend line played out absolutely gorgeous. Credit to Peter Elites. Let's look at this here in linear. Daily time frame, okay? Daily time frame, as you guys can see, 41.38. So by the way, to the 2 or 3 people that tried to troll me in the comments back on October 5th, when I made the video, Lee, once again, a thumbnail, October 5th, market crash warning, gave you the date in the title, gave you the date October 18th. for a potential market crash. Now, in this day and age, you're not going to get a market crash because we have circuit breakers. In 1987, the Dow fell 22% in a day. We have circuit breakers that trigger after 7% moves. But look what's happening to the date, my friends, from that prediction, October 18th, based on an esoteric fractal pattern. And if people don't understand this, then they just don't want to make money. That's fine. I don't care. But when you look at this on the daily time frame, S&P, where are we at? October 18th. Trackball is going to be problems again. Right here, guys, October 18th candle, down to where we are now. I don't know what I'm talking about, right? I gave you a move in the market for 240 bars, a 5.5% drawdown in the S&P. Find me another channel on YouTube that gave you that. You're not going to find one with the trade. The last week, I gave you the trade at 43.82. Gave you the date on October 5th to look at October 18th. Not going to find it. Like and subscribe, guys. Really would appreciate it. Unique content on YouTube. So that's that larger view out. We're going to look at this from a TA perspective. Where is this going? Let's pull our fib. We just broke 1272 at 4150. This, guys, my next level is 4082, right? 4082 is where this is going. And you can, and, we just looked at the log scale on monthly. It was 4026, 4082. I think this is, if we don't pull back up here, you're dropping back down to 4,000, okay? And you're going to start to hear a different tone now from people on CNBC and Bloomberg once we get to 4,000, because right now they're still pleading the case. Well, can we still get the year-end rally with a new all-time high? Remember, Tom Lee, just as recently as 2 weeks ago, said new all-time high for the end of the year. Does that look like that's happening? Does that look like that's happening? Or do you wish you were watching us and you wish you were in our Discord and you short it at 45.92 and captured all of these market movements? People on TV that rely on your money to invest are money motivated to keep you invested in the marketplace. Scott Minerd, before he passed away, said he doesn't want to be a billionaire. He was a CEO of Guggenheim. They had half a trillion under management. He said, I don't want to be remembered for the gains I made, people. I want to be remembered for all of the crashes that I was able to keep everybody's money safe. Okay, because you lose so much money if you're in at the top of a rally, the top of the market, looking at .com where the market fell 50%, NASDAQ 84, looking at the great financial crisis where the market broke 57%. You lose so much money, and it took 7 years after .com to make a new all-time high. Lots of people will be stuck, especially in bubble stocks, waiting on a larger time frame here, guys. We will find a bottom. We will get some type of base. Whatever it comes up to, some type of double top or whatever, that's my next big trade. And we trade on the smaller time frames in the Discord as well. So watch 4082. Here we are. I'm going to show you the channel perspective. Broke out of that channel hard, 41.39, guys. Broke out of that channel hard, right? Our trade was way up here. Seems like so long ago, just underneath the 50, and look at this move down right now in the marketplace. So let's look at the MFI here. MFI is in the bearish. You have a lot of movement you can do on the MFI to the downside. You are nowhere near, from a daily perspective, the gold standard perspective of being oversold. Yet when I was watching Bloomberg all last week, market's really oversold here, Bob. Market's really oversold. Somebody actually said, if I can find the clip from CNBC, there's a money manager from a large institution saying, I would back the truck up back here at 43.82. I would back the truck up and buy equities. I think it was I want to say it was Chris Harvey from Wells Fargo, but we'll look. I'll see if I can find that clip because that was credible. And then look at this. Will they be held accountable for their predictions? Nope, they never are. They never are. So let's go ahead and move forward. Let's look at gold. I put a trade on gold at 1987, and we're back at 1985. We got down to 1972, so we're chopping around here. Looking at that parabolic curve here, it's something that we talked about in last video as well, trading parabolic structures. We'll see if this trade ends up working out as well. This was a massive fear trade here in gold with the events in the Middle East, and we'll see what happens with gold. To me, this has the structure of a double top. We'll see if it has any room left to go up. And let me see here. That's a 50% retracement and a 915 up. So we're just chopping around. At some point, I would expect gold to really start moving. In an 8-hour time frame, you're in a downtrend. So you have some divergence starting to form in the smaller time frames. Let's look at this on a daily. And let's look up here on the daily. On the daily, we were pretty close to overbought. Didn't quite gas out, but we went flat. So maybe we'll get that last little surge to 2012. We'll see if we do. And that might be the topping structure for the gold here, guys, and might get some nice moves in gold as well. And I'll be monitoring that. So let's go ahead and look at this. Move forward to NASDAQ. NASDAQ selling off hard again. The beauty of parallel channels. I mean, look how well this tracked your double top structures, your fall down. And where's the NASDAQ falling? You don't even need a fib to see this, guys. Look at this. Look at the 200. That's where your NASDAQ's going. Your NASDAQ is 200's at 14,009. But let's go ahead and throw fibs on here. See if we have any confluence. I think the 1618 is going to be a little bit below it. Let's go to our fractal low. Up to that pivot high, the fractal high. 1618 is at 13,886. We'll see if the 200 holds, or if just like the S&P, just like the Dow, if we fall below the 200 and land on 13,886. That might be that next move here in the NASDAQ. And prices will not drop forever. Don't worry. At some level, people will want to get back in the markets. And the level, when I'm looking at fibs, if we end up dropping below the 200, I'm looking at confluence too with this channel, right? Because this is going to provide potential resistance right back around 14.2. So beautiful dissensions in the markets that many of you have been expecting on your own. And also if you've been watching this channel. Let's look at the FTSE. FTSE, we are at... I shared this trade on our Discord as well. Shorted up here, got this great move down. Told the guys if we break this neckline, my target's going to be 71.93 at the 1618. You're hovering between that 73.91 and 73.04. As you can see, you're trying to put in some type of bottom here. But if the American markets continue to show weakness, I would expect this to come down. If they start to bottom soon, maybe you'll start putting in a bottoming pattern. 73.04 seems likely to get struck as you got pretty close to it already. Let's check out some individual stocks. We'll wrap the video up, and I hope everybody has a fantastic weekend. Individual stocks, I'm looking at Ferrari. How's Ferrari doing? See, as the markets descend, now we have the descending markets. Now my interest starts to key on some individual stocks with very large PEs. Ferrari, the tag for that is race, okay? Race. If you're on Simple FX, look at race. And so Ferrari fell down to the 618, 297. Now, if the markets start to bottom at some level, I want to see our W form, right? I want to see our W form or our three-wave pattern. Our three-wave pattern would be this. You have your move down, 618. If that holds, make a lower high this, okay? Trading here, stop loss $1 above this level, and that's my trade with confluence of descending markets, meaning the market rally happens, market rally starts to top out, NASDAQ, S&P, and then we have the rally and confluence with these high PE stocks, make a lower high. That's my trade, guys. And when I look at this, from a resistance perspective, let me show you the 5-wave. The market rally, for whatever reason, got really fierce with a dovish Powell. If we look at this from a 5-wave perspective, then we're just going this. We're doing this pattern, the W pattern, if the 618 holds, back to the upside where somewhere it makes a top, and I'd be trading it up here, okay? That's what I'd be looking at here, and that type of pattern, a W pattern. So let's look at this from resistance, and we'll go to the next target. Pull this down. If this bottom holds, that move to the upside, I'll get rid of these fibs so you can see this better. That move to the upside, I'd be looking at 618, 309, 786, 312. Okay. Those are the two levels I'd be looking at if you are interested in trading individual stocks. That's what I'm looking at. Maybe something like that. Give you a bottom move, and then you can trade that double top with my stop loss again, maybe 318 to 320 if this holds. And if it goes to break to the upside, it has to take out that fractal high of 317. Okay. Let's go ahead and look at Tesla. Tesla, again, another beauty in the channel. Fell out of the channel. You can see your massive, we've been over this many times. I'm not going to bore you guys with it. The massive double top structures, 5-wave pattern structures all over Tesla. You fell below your fractal low of 212. Tesla at 206 right now, chopping around. You have that big gap. And if the market's bottom and you get any type of recovery rally, dead cat bounce, which trust me, if we do end up going down to that 4,082 on the S&P, lots of people are going to be doing what? They're going to be buying these dips, but the difference is the big money is going to fade the tops. And then you're going to see these types of patterns form, right? Big money fades the tops, comes down, retail buys it because it's going to go back up. It's going to a new all-time high. Big money fades the top again, and then you have your break, guys. The markets are beginning their descent to take out their lows they put in 2022 before the Fed stepped in March and pumped the market full of liquidity. And now reality of what's happening in the macroeconomics is taking place. Want to see if Tesla comes back up to test this, both the trend line and fill that gap. Watch 249. Okay. Being patient here, larger time frame structures that give me high probability trades. Tesla support beneath you is 192. You're at 206. So see if you can hold and chop around in this range. Adobe, man, lots of guys in the room went ahead and traded Adobe up here. We've been talking about it, 560. I wish I was in my Adobe trade. I am not. Adobe 513, you want to see it hold 499, which again is your fractal low area. Lots of support in this area. Key resistance at 560. If Adobe ends up with the market, when it finds a bottom, whether it's at 4082 or slightly higher, if it finds a bottom, you still have your low, potentially a higher low structure. You want to see if Adobe can come back up. And again, you break your fractal high, you have nothing but a W pattern. And that would be awesome to see 608 hit. Okay, here's your W right here. That would be awesome to see 608 hit, but we'll see, because we have a very bearish trending market right now. And one more, guys, NVIDIA. I promised the CAC. I'm sorry to the people that asked for it. I forgot to add it to the charts. I'll tweet it out. All right. I'll tweet the CAC out, the French 40, Je peux la vie. I'll tweet that out so you guys can see that. Okay. I'll give you the information for the CAC. So NVIDIA breaking down below our fractal low right now at 401. Guys, you know, I mean, this was a huge bull trap AI bubble stock, okay? I know a lot of people got into it over here. A lot of people felt vindicated because it came up here, 502, and you have a high, a lower high with down thrusts. But again, you have your 50 here and you have your 200 coming up. Everything is going to be approaching a death cross. Just FYI, when the indices death cross, individual stocks will be next. And this has a long way that it can give up, okay? You're at 401.56. We could rally back up for, once again, another lower high once the market's bottom. Look at this gap down here at 318, okay? And you're at 401. Look at that gap at 318, just below your 200. These things, guys, just taking it again from the gap, right? Here's your impulse out of the gap. Just taking it from the gap. Look where you're at, the 46 retracement, 403, 618's at 376. See if this comes down to the 786 at 381 or 341. But again, when the market's bottom, you're going to see some relief in the stocks, and just wait and see the patterns that form, because you're going to either get some type of double top structure, right? You'll get some type of double top structure, or you'll get in a fierce rally, a W pattern that we can pull fibs on and give you targets before it tops out for the next leg down. Guys, like, subscribe. I hope everybody has a fantastic weekend. Talk to everybody on Monday. Peace, everybody.